every Monday to Friday. This is Peter Lewis's Money Talk.
Money Talk.
Good morning and welcome to a brand new week. It's Monday the 14th of August. This is Peter Lewis with one of Hong Kong and Singapore's most listened to financial podcasts, Money Talk. In today's business and finance headlines, new lending by Chinese banks fell sharply in July to levels not seen since November 2009. The data adds to a series of bleak economic readings showing further evidence of a lackluster economic recovery in China. US wholesale inflation rose more than expected in July as prices for services jumped, in a sign the Federal Reserve has more work to do to combat sticky inflation. The Hong Kong government has revised down its economic growth forecast for this year after data released Friday confirmed GDP grew 1.5% in the April to June period from a year earlier. On today's programme, providing a view from mainland China will be Shanghai-based independent economist Andy Scher. And if you want to get in touch, please go to my website, peterlewismoneytalk.substack.com.
Peter Lewis's Money Talk.
I'm joined now by Shanghai-based independent economist Andy Scher. Morning, Andy.
Good morning, Peter.
I'm getting the feeling that we're entering a sort of a crucial period for China's economy. We've seen a lot of data over the last few days, haven't we? Most of which was not good. Chinese economy slipping into deflation. The trade data was bad. And then we had new bank lending falling to the lowest level since 2009. And now a worsening property sector as well. What's your assessment? Is the sort of Chinese economy sort of entering a crisis period?
Well, I think that China experienced a property bubble for a long time, and the bubble peaked a couple of years ago, and property developers got into trouble and not able to pay back their debts. So that's been hanging around for a long time, and then we have this global trade recession. These two things are coming together. Now, on the property side. These guys have not been able to repay their debts and are being dragged on, and more companies are coming down their path. So it has obviously it has a big impact on the credit market and as well as the property sector as a whole. So I think the issue is that you piled up mistakes before. Now you have to pay. You have to pay for it through adjustment. Basically, the property developer should not be able to borrow more money, and that has an effect on the credit market. So these are things that the market needs to adjust. And it would be a mistake for the government to stimulate, to bail out these guys. And then you create a bigger problem. So you have to look at what's going on now from that angle. Then you say, hey, it's probably it's a good thing that the economy is experiencing bad news because that the mistakes are being corrected.
But is it getting worse in the property sector? Because if you look at Country Garden, which was China's biggest property developer, it's got about $200 billion of loans, which clearly it can't afford to repay unless it finds a way to refinance itself. And the refinancing it tried a week ago got suddenly cancelled. It's going to be on the verge of collapse, isn't it?
Yeah, but the issue of refinancing is refinancing. It's kind of financial guys like to talk about refinancing, but the issue is that if the underlying fundamental is not there, refinancing is just a Ponzi scheme, and it's been a Ponzi scheme. The property sector has been a Ponzi scheme for a long time.
So you're saying that the best thing to do is for the government to let these companies go under, not try and bail them out, just let them go under?
Yeah, just let the market adjust. The Chinese property sector is too big and the price is too high. So the sector needs to shrink. The sector needs to shrink at least by 50%. At least by 50% in terms of volume.
By 50%?
In terms of volume, yeah. And in terms of price, like in big tier 1 cities, still trading at like 5 or 6 months of salary per square meter. It's not sustainable. So the price has to come down. You cannot say that when things are wrong, when they come down, the economy is not good. You can't say, hey, because the economy is not good, we have to stimulate and we have to make these things to go back up. So you're just making a bigger problem.
But if the property sector contracts by 50%, that's first of all going to have an enormous impact on confidence, isn't it, in the property sector overall. People are just not going to want to buy, certainly not from private developers under any circumstances, but presumably it would have enormous spillover effects on the overall economy as well.
Yeah, well, the first is that confidence. Confidence in what? Confidence in a property bubble, keeping it going. Is that a good thing? I think that China had this conversation many times before and made the bubble bigger and bigger.
Mm.
Now the government is not going to do anything.
But
because there's no political imperative to do it. The government is just the same guy in charge, and there's no opposition.
So you think?
So now it's time to do it.
So do you think the government then, they will sit on their hands? They're not going to do anything at all about this and just see what happens to these property developers?
Yeah, I think that the issue is the 20th Party Congress really was over, and the political transition has already occurred. It has already occurred.
Mm.
Yeah.
So what is your thoughts then about what this means for the economy overall? Let's suppose this happens. Let's suppose Country Garden defaults and the government doesn't step in. What is the impact going to be on the Chinese economy of that?
I think that the economy impact I wrote about it is that there is an impact, a traditional impact through like the construction materials and so forth. But that is not as big as people think. The property sales were between 15 to 20% of GDP for a period of time. But half of that is just land sales cost. It's a transfer payment from the developer to the local government. And then that money is from debt. So you basically, property developers borrow money to pay the government. So that is a big in half, and a lot of small city governments don't have the money to go on, so they cannot pay for their if they say civil servants or employees and so forth. And that is the adjustment they have to make because it means that their governments are too big.
So some of these local government financing vehicles, are they going to have to be bowed out by the central government? Because if we allow the property sector, if the government allows the property sector to contract by 50%, it's going to put enormous pressure on them and also on the banks as well.
Yeah, the issue is that obviously there's debt to be paid, but then there also there's revenue. There's kind of expenditure to be cut. So that's the adjustment that needs to happen. So in the short term, there is a bad impact on the economy, and they have to cancel their investment projects, and they have to lay off people. But over time, it's good because these governments are not viable. They depend on a bubble to keep it going.
So you're in favour of just letting that bubble burst, and then presumably that's going to...
It is bursting already, and if you want to bail it back, you want to bail it back. We're talking about tens of trillions of RMB, and this government cannot afford it because politically there's no need to afford it to do that.
So are we reaching...
If there's bad news, so what?
Are we reaching a sort of Minsky moment now where this is all coming together and it's got to be dealt with now?
It's not a Minsky moment because in China the market doesn't work that way. There's no snowballing. If the developer cannot pay back, it doesn't pay.
Which is what we're seeing.
So the creditors don't have any rights.
Right.
They cannot just take over the company and liquidate it. You cannot do that. So there's no snowballing in China.
Although they could take their overseas assets, presumably, the assets they have in Hong Kong and elsewhere.
Not a lot.
So what does this mean then for demand in the economy? Because we've already seen, haven't we, China slipping into deflation. We saw that new loan data on Friday, which showed Chinese bank lending falling to the lowest level since November 2009, suggesting that really there's just completely insufficient demand in the economy. This will make that demand problem even worse, won't it?
Well, in the short term, you say that it's bad for the economic growth. But so what, right? People are paying off their debts early. Is that a good thing or a bad thing? Mm-hmm. So economists oftentimes have this contradiction that what sounds good in common sense is bad for the economy. But it's only bad in the short term. It's not like when you let the economy go down, it will keep going down. It's not like that. The market works, and once the excesses are being squeezed out, the economy will stabilize. And also, deflation is like the economists often say, "Oh, deflation, bad news, keep money cranking." It's the wrong way to look at that. And China had high prices for a long time, like from automobile, like everything made in China should be cheap. But why automobiles were more expensive in China than in developed markets? So and why bread in China is more expensive than anywhere else?
So you're saying.
So now
what you're saying is very different from what most other economists are saying on the mainland. They're calling for stimulus. They're calling for the government to intervene to stop the economy slipping further into deflation. What you're really saying is that there'll be some short-term pain, but the economy will eventually readjust and sort itself out. And therefore, the government should refrain from doing those types of things.
Yeah, you look at the people who are saying, let's just crank up the money supply and just give more money to property developers so they can refinance, and then they keep on buying land. But the basic business is a bubble, is a loss making, but it doesn't matter. You keep it rolling, right? It's snowballing, and this is basically creating a bigger and a bigger problem for yourself.
Okay,
that's why we're where we are now.
Okay, well, very interesting thoughts, Andy. It's always very good to hear your thoughts on these matters. That's Andy Scher, who is a Shanghai-based independence economist.
You're listening to Peter Lewis's Money Talk.
Money Talk.
Thank you for listening to Money Talk this morning. You can find more details about some of the topics I've been talking about today, along with information on other headlines and market moves in my daily newsletter. Take a look at peterlewismoneytalk.substack.com. I'll be back with another show tomorrow. Joining me then will be Asian fund management industry consultant Stuart Aldcroft, Will Denyer, US economist at Gavacal, and Tony Nash, founder of Complete Intelligence. Bye for now.
Money Talk.